Well, good news for thousands of Californians who made risky mortgage loans and now face losing their homes. Wells Fargo made a deal with the state attorney general to fix some of those adjustable rate loans that have mushroomed out of control for people. The bank has some 14,000 borrowers who qualify. Linda Yee explains who they are and what they can expect.
Loretta James is one of thousands of Californians who owe more on her mortgage than she can afford to pay. She refinanced with Wachovia in 2006 because she needed money to pay bills.
They just said, pick one of these payments, and I always pick the lowest payment.
And they didn't tell you?
So the lowest payment is doing actually nothing. Nothing.
They never explained to you that the lowest payment will eventually go up in a certain amount of time?
Well, not that I remember.
You didn't understand the loan.
I didn't, right, exactly.
But they said, go ahead and sign and you'll be fine?
Right.
James says next year, when payments go up another $100 a month, she won't be able to make payments. When Wells Fargo merged with Wachovia, it also assumed her loan. She tried to get her loan modified.
They turned me down, and now I haven't heard anything. All they did was send me a form out for a short sale if I wanted to do a short sale to my home.
Selling the house at a loss is not an option, but under the new agreement with the state attorney general, Wells Fargo may be required to give James a new loan. Qualified borrowers will get letters in the coming weeks. Housing advocate Mava Elise Brown.
It includes people who are delinquent, so people who are behind in their payments, or people who are at imminent risk of default.
Like it will for James. She lives on Social Security and a small pension. There's not much left after $837 monthly mortgage payments. She does without some basics.
I mean, less food, less, you know.
You're giving up on things.
Right, exactly.
As part of the agreement, Wells Fargo is required to pay $33 million in restitution to the 12,000 people who lost their homes to foreclosure. It isn't a lot of money. The average payment is just over $2,600 apiece. Housing advocates say it's a settlement, but it will never compensate for the misery caused by questionable loans. In San Francisco, Linda Yee, CBS 5.